The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, everybody. Today, we have a special guest, Dave Thompson. Dave is founder and CEO of the Thompson Investing, which provides investors opportunity to invest with experienced operators in multifamily apartments, self-storage, and manufactured home parks. As general partner and sponsor in syndication deals, he has raised significant private capital. He helped provide investor funds to purchase over 6,000 apartment units and thousands of self-storage and mobile home park units. Welcome to the show, Dave.
Hey, John. Thanks for having me. Glad to be here.
Man, it's a pleasure to finally meet you. I know we've been connected through social media and other things like that. And we were just talking about the conferences we might have known or met each other at, but I think this is our first formal connection.
Yeah, I think
but
you're right.
Tell us about your background and how you got into all this.
Sure. No, great question. I'll try to keep it succinct. I got involved in syndication as an investor and also working on the general partnership team in early 2016. I had a mentor that was teaching me how to scale up and look at apartments, and I decided to join his team. And one of the activities I was able to help him with, I just said, "How can I help you?" Because as through the mentoring process, like, this is great, but I found it would be a lot of work, right? It's a big team approach, and you got to have analysts and people looking for deals. So basically, I said, I think I can educate investors. I don't know how many investors I have, but certainly I think these are attractive deals. And so I started going at it that way, more of an investor relations approach and working with them. And then that mushroomed from there. But my first deal was in Dallas, Texas, a 320 unit. We've since sold that, had a really great experience about that. But that's how I got involved in syndication and just kind of grew a company up from there, because I realized investors are also looking for more than just apartments in Dallas with the same sponsor. So that's kind of how it grew. I had a degree in financial planning, ironically, in college, but I didn't put it to work. I worked 20 years in the corporate world, high tech, and started buying some single family homes around Austin, Texas. I thought that was fun, but I'm like, it doesn't scale real well. I have to keep saving a lot of money, and cash flow is not as great as I thought. But I landed in apartment syndication. I think it's a great spot. I've added a few niches along the way, self-storage, mobile home parks. But other than that, it's the same kind of recession-resistant niches and educating investors. And that's kind of where I am today.
That's pretty cool. I love the fact that you've scaled and moved on to other assets as far as, self-storage and mobile home parks. But you started in multifamily. Walk us through how you started working with passive investors in that beginning stages of forming your company.
That's a great question. I mean, I mentor and coach folks today who are interested in being on a syndication team. And I see there's like 3 ways to do it. You're either a person who loves to hunt for deals and looks for reams of data and likes to really spend time with brokers trying to understand the deals. And you have to win the deals. It's not easy. It's competitive out there. And then there's people, once you get the deal, like to work with the property manager, be an asset manager. And then you got another group that needs to bring the capital to the deal. And that's usually the loan company providing part of that. And it's the equity, that the down payment. If you can think of a house, like an apartment, you still need a down payment, closing cost. And I looked at all of those activities and I think the one about talking to investors and educating them was kind of my focus. And that's where I talk to folks about today. It's a team effort to be on a syndication team. Find your role, find what you want to do. I loved explaining these opportunities to people because most people have been exposed to the stock market, right, John? And they just aren't getting exposure to some really cool commercial real estate asset classes. No one's ever explained it to them. No one's ever told them all the benefits, cash flow and tax benefits and all those kind of things. And I find it's an easy conversation because we have so much good to share. That's how I started. But if you really ask me how I did that, it's almost like some people ask me, is it network marketing? I said, it's not like that. We don't have layers, but it kind of lets how you start your business. You got to know who in my inner circle, friends, family, coworkers, parents in my kids' soccer team, who knows all of these people you could know. You sit down with your spouse and you kind of listen to all these people who might be qualified. I mean, we do a lot of deals with our accredited status, so we don't know until we ask these people, but it's just a simple exercise. I came with like 100 and something people on a spreadsheet and, simply just kind of introduced that I had left the corporate world and I was getting into real estate. And here's kind of why I like apartments. That's it, a little blog, why I like apartments, nothing about, it wasn't sharing any deals at that point. There's some compliance issues around that anyway, but just why I like apartments. And I got people, and I said, we're working on something. But that's how I started and ended up getting, if I remember my first deal, I got 13 investors, raised $1 million at my first deal. And I found, wow, I never looked back. I thought this is my calling and my passion. I love real estate. I love talking to people. I bartended in college. So I guess I kind of felt I had a rapport with people somewhere along the line, but I was passionate about it. People knew that. And if I could just slow that down a little bit with educating them on some logical things, like framing it, it's like a slow flip. If I could do that, then they started like, okay, when you have a deal or something like that, and I do qualify and I'm looking for kind of passive income, or I'm looking for retirement income or scale down from a full-time job to a part-time job. Show me how. I don't know. So that's how I started with it. And it's grown to 400 accredited investors later. It's like, I look at this like a big family, I'm in 30 something syndication deals. We've raised over, I don't know, personally over $65 million with the company now over $150 million. And it just all started from humble beginnings with a passion and just, repeating and repeating. But I found a resonating message and audience that were really ready to receive that message. Yeah. And we've seen most of those investors are return investors now today, John. And if from a capital raising side, if you can stay in the business long enough to kind of, you're not relying on this but it starts building and building. It's like a snowball. And that's why I like it. About 90% of my investors are return investors or referrals. And that's when the business gets exciting, because in the beginning, it was a spreadsheet of names. I knew these people, but I may not know how to talk to them in 3 years. And it's going to be a little uncomfortable. Like, why is this guy reaching out to me? But it's not, we don't do any cold calling. We don't do any of that kind of stuff. It's all relationships, but that takes time. Takes time to build, but you can get there pretty fast. I mean, in 3 or 4 years, I was, creating an incredible lifestyle. And I love to coach and mentor people today about how they can be part of a syndication real estate team by bringing a skill that can be learned. Yeah.
I love it. I love it because you have a financial planning background as far as a degree. You never pursued it. And it kind of feels like it's closing the loop on that with that career, with the current business that you started. And you mentioned a few things. You mentioned the keywords is the spreadsheet, and growing your firm, you started with the spreadsheet. Is there an investor portal that you're using now?
I still use spreadsheets. I try to keep things simple. When someone comes into my world, I'm just kind of putting it on a spreadsheet, basic information, and maybe it's the conversation I had. Then I have an assistant. She puts that into a more of a CRM type tool. So we capture that long-term. I can keep recording it there. But yeah, that's kind of the system for me. It's kind of simple spreadsheets to get started, but then that's just like a initial trap to kind of get things organized and then eventually move it. But I also like it because it helps me kind of stay in front of investors I've talked to maybe over a period of 1 to 3 months. Because my experience is if I can get you in front of you on a phone call, we can talk 30, 60 minutes and kind of get you comfortable with the, apartments and their history and understanding your risk tolerance and understand the benefits and some of the risks of these investments. If I can get you through that and I can get you into a deal to get experience, and we always want to get people at a prudent level, kind of the minimum, just test the waters, you're comfortable. We're not looking for you to make a home run on this deal. I try to coach people to be diversified. We'll get into that a little bit later if we have time, but just kind of take a step into it. I think you'll like it. You start seeing money coming in monthly or quarterly. You see reports coming from me. This is like real. Like I'm an owner of an apartment. Wow, it's so cool. I can tell people at a cocktail party. I own real estate. I'm a big time real estate person, and that's cool. We want you to feel that way. But really, I do best when I keep the business simple. That's how I teach it too. Just kind of keep the business simple. There's all sorts of whiz bang tools and things over time, but I just want to make sure I'm circling back to those initial investors I've had a good first call with and talk with, and really trying to develop a rapport with them so that they like what I'm talking about. They like me. They feel like they can trust me. It's really a trusting business anyway. But yeah, that initial, I think what your message was, kind of how this thing starts, your initial message is just helping investors understand that I'm trying to build a long-term relationship with you. This isn't like a transaction where I'm here today and gone tomorrow and good luck with that. It's more about my reputation is on the line. And I invest in every deal. I do the due diligence and invest in every deal that I do, and I share with my investors because I want them to know that I'm aligned with you. And I'm watching this as closely as you are, if not more. And I'm that person that you can trust and go to for questions, even after the deal, after we close on the deal, that you're still getting reports from me, that I'm still going to answer your questions about, hey, I didn't get my money, or yeah, I'll be the facilitator working with a sponsor. So that's the message I want to have. I want to tell people what's this experience is going to look like for them from the beginning to end, and then kind of walk them through at a high level what that looks like so they know where we're going.
I really enjoy that you shared that with us. And when in your business did you know that you needed to hire and bring on staff as you were growing? What did that look like for you? What were the pain points and what was you trying to solve to free yourself up from?
Yeah, I think, and I think the business scales really well, first of all. So you can do a pretty big business, from your home. You don't need to go out and get an office and commute and worry about it. It's more efficient. And then I can meet investors if they're local. I can meet them at a coffee shop or something to get an initial introduction. But a lot of this is email and phone. In fact, what I love about the business, I've been in Dubai and Iceland and Australia on family vacations because it provides a great lifestyle. But I'm also able to kind of couch in, in the morning or a little bit in a couple emails. I mean, it just travels really well. It scales very well. Because really the back office is really the sponsor. They're at the end of the day, they're handling all the distributions, a lot of the paperwork. I'm the facilitator to that. And I can help answer a lot of the investor questions. But at the end of the day, it scales really well. But where I found I may need some help, I decided to get a portal, an investor portal. Now, for me, my spouse is very interested in the business, and so she does the books, and so I was just layering on different things with her, and she's my partner in this, and so she took over, and she's got those types of skills. And then I started realizing I was answering a lot of administrative type questions that, I'm like, well, if I can have a funnel on, things going down this channel, you take over, or maybe we created a separate mailbox. Info at Thompson. It doesn't everything has to come to David at Thompson Investing. So started creating some different mailboxes. I got a project manager to help me with, I've got a capital raising course, by the way, John, that I just getting ready to launch, and maybe some of your listeners may be interested in that, but I actually have a project manager for that. So, it says Deanna, or her name is Deanna at Thompson Investing. We give her, she looks and feels like she's working for the company. She is, but she's kind of part-time. It's you can do a lot of this by outsourcing. So they're not employees of Thompson Investing, but they are helping us on special projects or needs that I have. But the capital raising scales very well. You don't need to have a sponsor probably has to add a lot of group folks. Like, as they grow, they have a lot more operational responsibilities and oversight and things. But from a capital raiser standpoint, I like the independence, and it's not as intrusive of my time.
Thank you for sharing. So when an investor comes through and you're onboarding them and they finally get to the call meeting, if they're referred, they're usually kind of doing their due diligence on you and sourcing you out and qualifying you. How are you qualifying investors? Because we're not all able to work with everybody, right?
That's right. Well, first of all, referrals coming to me are warm. Let's call them warm bodies because they're already relying on a trusted friend or colleague that probably had pretty good experience with us already, and so that's why referrals are so valuable. But I feel like I always want to have a conversation with an investor. There's some compliance things around that we have to think about. I do have to qualify you. Are you accredited? Most of our deals are, so I need to notify that in my records that you are accredited and investor. That's number one. I do, besides understanding your background, I want to know your experiences in investing in general, your experiences in particular investing in real estate. And I get a lot of people because I want to know where you are. It helps me kind of understand where this conversation is going to go from. Am I going to be educating you on investing in syndications? And then maybe taking an apartment as an example, or have you already invested in 5 or 6 syndications? You just kind of want to get to how Dave Thompson works and how I'm maybe compensated and how the mechanics of the process is going to work for me and how my model kind of works. And then what deals do you have? The more experienced people will get to the point that helps them faster. But I'm really trying to gauge, and most of the people that come to me, a lot of the people are new to it. So I'm really slower there. I want to kind of really help them the whole first, maybe an hour call, most likely. It's just helping you understand why real estate, why not the stock market, why benefits of, and I usually will tell investors to focus on this discussion. We're going to talk about apartments, right? I'm not going to talk self-storage, mobile home. I'm not going to confuse them. I keep it really high level. A typical conversation for me in apartments, John, may be, because I deal with value add apartment owners, that a typical model is we're going to renovate and we're going to market and sell this thing, get out of it in 2 to 5 years. We're not buy and holders. So I try to help them understand, if you watch the flipping show on TV, you kind of know that you fix it up and then at the end of it, you can sell it or rent it. And that's kind of what we do. We charge higher rents, or we eventually want to sell it or refinance it. So I give them the basic concepts around that and know what to expect as an investor. You're going to get paid. Yeah, you get paid monthly or quarterly cash flow when we have it. We talk about preferred return. We talk about the holding period. We talk about when you get your principal back. We do talk about risk. You need to talk about risk. You can't lose all your money in this investment. Yes, it's a fairly recession resistant. I can show you data that shows in 2009, only 1 in 200 apartments across the country, good and bad markets, good and bad operators were delinquent on their mortgage. It's pretty resilient, but I can't say for certain this is a 100% guarantee. You can never say that. You could lose all your money. You invest $50,000, you could lose that. But it's still a fairly lower risk investment. But we could have times like COVID this year where we may not pay out for 2 quarters because we're conserving cash until things get better. So we just want to help understand people's expectations and their risk tolerance. That's a good one to go into. And then, hey, we're dealing with what are we going to get reports? Is there a portal to see the investments? How frequent do you have deals? People want to know. They may have $300,000 to invest and sit in cash. And if this is a good experience, I want to know, hey, how much cash are we talking about you're interested in putting in real estate and over what period? That helps me understand. Am I going to put more attention on them? Yes or no, but I want to know if this is just one and done. I got 50,000 and I can't see myself doing this for another 2 or 3 years. Well, okay, I might look for a fund for them. I have deals that are funds where they're instantly diversified across many markets, many operators, many sponsors. Maybe a fund's better for them, kind of like a mutual fund of real estate. I kind of give them that idea. But if you got 500,000, then let's go $50,000 and maybe you're going to put over 10 deals over 2 years. Then I can start talking about apartments. Maybe eventually we can talk about self-storage. We're definitely going to talk about different markets, different geographies, different sponsors. So I'll stop there, but I just want to kind of understand you to help me shape how I'm going to help you better, right? That's pretty much it.
Man, I literally love that. And the fact that you able to offer a fund and, the fund has so many advantages as well. It's crazy because that's kind of like what offering 2 services, offering the one-to-one syndications or offering the fund, which is kind of long-term, but you're truly diverse and stuff. And we'll walk into, right. We'll break that down a little bit later.
Okay, sure.
But what is something you had to implement in your business as a result with working with passive investors?
Yeah, I mean, for tools, and I feel bad because I guess, I got a couple of dollars in the household, and both of them are way more high techy, and look at me sometimes like, Dad, me setting up a Zoom call was a challenge there for a while, things like that. I still probably get help on things that just kind of scratch their head, And I told you earlier, I kind of keep things simple, but there's a couple of things you definitely, I think in this business of the capital raising side and dealing with investors is, we did fairly early on in the game, as we started doing more syndications, I felt a key benefit, a stickiness that I would have to investors to keep coming back would be having my own portal. So I do have an investor portal. I went out and looked at some different ones, and I'm using a portal now that, ironically, one of my sponsors was also using it. So it kind of helps. A couple of my sponsors were using the same portal. That kind of helps a little bit in syncing things and getting updates faster from them. It helps during raises. But I wanted to have a place where investors would come and see all of the deals that they're invested with, how much, and distributions. And, I've got probably 1,000 investor transactions in here, and we've got 30 plus deals. And now that portal is so good for me, because if someone sends me an email and I don't remember they're talking to them for a while, it's been a while, I just go to the portal and I've got their contact information. I have their phone number, I have their email. So it does have good profile information. I quickly know what deals they're in. So if I'm getting ready to have a phone call with them, they may want a quick update, even though I'll offer, hey, this wasn't maybe the purpose of the call, but I'm ready. You're in these 5 deals. Let's just talk about how they're doing. You're getting the reports. I get it, but you maybe want a little color to some of these. So that's very helpful for that. And they also can go in on their own with their own password and look at their portal at any time. They can check distributions from their bank account. So I found the portal. I was not cool on it. I kind of wanted it, but I didn't really know all the different benefits that it has. And the other tool I use, John, is a MailChimp. And that's not a very sophisticated tool. In fact, it was free. I was looking for things that are free when I started. Now they pay. They charge me because I have so many users in there, but it's still reasonable. But for a small business, it creates very professional looking reports. I get from the sponsors, I review them, and I can create my own with my own logo, pop it in there. It's co-branded with the sponsor. And it's great for doing newsletters. I have a monthly newsletter, but MailChimp, I think its most powerful tool is I can set up projects by investor lists and just send the reports to that list. And, I'll, like I said, I'm pretty busy once a month around the 15th. I get all these reports in and we're reviewing them, and then I'm popping them out. And in MailChimp, you can schedule them, optimize when they go out to people, because I have people all across the United States. So it'll pick the best time zone for everybody. What's the best time to send it out? I can do the last thing I do my newsletter, and it's like, I want people Saturday morning. It's a little bit less busy for a lot of people on Saturday. The week is over. It's Saturday morning. They get up earlier than the kids or whatever, and they have a little quiet time to themselves, and they get their coffee. This is how it has in my household. I kind of value this quiet time. And if I look at my phone, I'm like, there's my newsletter. They may have more time than during the week when I'm popping in and out of their lives. So I do the newsletter like by the Friday, but I'll schedule it to go out at 2:00 in the morning or 3:00 in the morning, my central time. It hits the West Coast at 1 a.m. I feel most people are in bed by then. I don't want them to read it late Friday night. And it gets, by the time it goes out 5 minutes in increments. It goes in 5 minutes increments, because if I have a mailing list that's over 1,000 something people, if I send it all out one time, there's a good chance that it'll go into everybody's junk box. So MailChimp, you can schedule it. So every 5 minutes, it's sending out 25 people at a time. So it takes like 3 or 4 hours for my newsletter to go out. But that's how I've used MailChimp. And I'm only using probably 10% of its powerful features. It's really, they're adding features all the time. But anyway, I'll stop there. Those are powerful tools for a small business.
No, I really appreciate that, because everybody structures their newsletter different. For instance, I've learned that for me, Thursdays at noon have a good open rate. And I moved from Sundays at, I believe, 10 a.m. And I found Sundays was a big open rate because of the fact that people are less busy, or, like
maybe better. Maybe I'll check that out too. Maybe Sundays is where people, have Saturdays where we're going to have some fun, a lot of things going on. And maybe Sunday, I need to really recharge my batteries, right? Yeah, absolutely.
I mean, there's articles out there that say if people are really, really busy, Sundays and Wednesdays are ideal. But I did some research and started to push it out on Thursdays. So thank you for sharing that, man. Yeah, you said a few things where you co-sponsor. I mean, you work with sponsors and you're working with your own investor portal. How are you structuring those partnerships and relationships with your portal and their portal if they're not on your portal, if they're
Yeah.
using something else? And how are you forming those and structuring your dividends to investors through there?
Yeah, and this is where my spouse gets involved and does a good job of it. So one of the benefits of investing in your own deal is you also experience the distributions and those events happening, right? So we made a conscious effort to do that initially, but we found out a secondary benefit was that I know now when the distributions come in, I kind of know the cycle and that kind of thing, and we're able to update the portal by just taking one $50,000 investor and knowing what their or whatever I invested in it. If I invested 25 or 50, whatever it was, whatever that percentage of distribution is, I can then quickly within a minute or two update each deal across the 30 or 50 investors that might be in that deal. So it's manual. It's not, but it's doable. It's manual, but it's doable. And then the ones that are synced, it just kind of comes through. So yeah, you can do it. You can do it, but we're not trying to figure out a way to sync. And the other maybe not challenge, but I do tell investors during K1s, a lot of these companies want to put their K1 on their password protected portal. I don't want to have that on my portal. So I just tell investors, I give them all the instructions to go to the sponsors portal. I have a portal for investors to do one-stop shop to look at their stuff with me, but I realize I'm not going to get all of their business all the time. So I have to just realize that. I want to get most of it. I want to be sticky, but there's a few things that the one thing that they have to go to the sponsors portal for is the K1, but that's once a year and I'm fine with that. And
Thank you for sharing that. I mean, I think that's pretty common in this industry. If you have your own portal and stuff, I mean,
yeah,
it keeps things there for your records as well. And
right.
it's like you said, they only go in one place, maybe one time a year or something like that.
Yeah, and John, the other thing, we decided to not to put banking information into our portal. I didn't want to have that responsibility. I could have, there's a place for it. We don't. We even sponsor some of our own deals, and I have a back office, a company that has their own back office, and we share the same portal. So what's beautiful about that, when we do a fund, which we have before, they do the back office. So all the updates go, and those investors go into my portal. I don't even have to worry about anything. The K1s do transfer on those scenarios, but we chose not to put the banking information on my portal. I don't want it at all, and that's fine. They're almost like a sponsor to me. They're keeping that. They're used to keeping that and safeguarding it. So that's one other thing. If you have your own portal, you may want the sponsor just to keep that information. There's really not a reason for you to. The only tricky thing is sometimes investors will go to my portal and update things, and I just want to blank out I want to make sure they can't put in banking information. Because if they do, they think they've updated it and they're all set. And I'm like, no, my spouse has to kind of help you go back. And here's all the sponsors your deals are involved with. And we want you to go ahead and change that information in their portal. Or if you need help, here's the contact at the company. So that's the only kind of manual tricky thing. Most people are pretty cool with it. They understand that they're not getting the distributions from you. They're getting it from these other companies. So that's probably where they want the banking information kept. And they understand that.
Yeah. Man, you hit a couple buzzwords and it really excites me and gets me going. So you mentioned fund. Walk us through why you decided to roll out a fund and how did you forecast and measure your fund before to investors, because there's no real measurements pre-fund, right? So when you're rolling out a fund, you don't have any deals that you're rolling out to investors, but you're investing in your experience and you're practicing. And there's a bunch of benefits to reasons why, because you're overseeing and reviewing so many deals and qualifying and disqualifying more than the average investor that is looking at one-to-one syndications, right? Yeah. So how did you present and roll out your fund to investors?
Well, there's several different ideas there around that question. So one is, why would you want to do a fund? And there's certain reasons from an investor standpoint why funds would be attractive. So maybe we take you on that channel. One is you can get instant diversification, like a mutual fund for stocks. I mean, we may be in different geographies. Maybe we do an apartment fund. Maybe we're going to put that's a 10 million fund, and we're going to do 2 million in 5 apartments. We'll choose some different operators. We'll choose some different geographies. And although it is multifamily, it's giving you diversification if you like that space. And so an investor who says, I only have 50 to 100,000 to invest this year, and I'm not sure the next couple of years, but I sold something at 100,000. I'm like, you might want to consider a fund instead of putting that $100,000 into one asset, one city, one sponsor, and because I think you're reducing your risk. This is diversification concept. So that's one reason I like it. The second thing I like it for me personally is when I have a fund and I have an investor, typically have funds open for a set period of time. Either it's usually like it's open for a year or whatever the target, usually is 10 million or 1 year, whatever comes first, whatever I can raise first, I'm going to close the fund. Then we're going to go buy the assets in that first year. And then we're going to hold it for 5 more years. And then in 6 years, we're going to disperse everything. Principal comes back and returns. That's a typical fund. But what I like about it, talking to investors, if John, I'm talking to you today, you call me, we have a qualification call. You like me in general. And then about 30 days later, you're on my list and I send you, hey, I got a deal. I got this fund. You might be interested. And we talked and you're kind of you got $100,000 inheritance and you just want to kind of get this in the market. You don't want to, you do 20,000 in 5 deals because you don't even meet our minimum at 50,000. So it's kind of weird. So how about a fund? A fund might be pretty cool to you. Why I like that is the fund's open for a whole year. So I have these conversations with people going on the whole year. A single asset has a very finite start and end date. I may be between single asset deals. I have nothing really to share with you. You can call me, hey, you have a deal. I really don't have anything. We're looking. A fund is always open. I mean, for a whole year. So I always have something to offer investors, right? So those are some personal reasons. I think those are the most important. Now, from a standpoint of an investor, they got to understand a fund does cost a little bit more to run. I have not only have legal fees, but I have upfront, some administrative things, and it's a little more complicated for the back office. And so there's some things around a fund a little costlier. So, but when we do all of the math, you just want to make sure that the returns you're getting from these assets reward you enough, are still competitive. So from an investor standpoint, you just want to understand the fees and charges, but there's typically a little bit more cost involved than when I'm actually working alongside a sponsor in their deal where we're basically giving the same deal to the investor, right? So that may be one caveat, but I think the positives outweigh the negatives on funds for the most part. There's one other negative thing I think on funds is they're typically a blind. What does blind mean? Well, John, if you said, listen, I like your fund and I have something going on. I said, if you're interested in investing, I just launched it. I would probably be okay with you I said, John, I have the first deal. It's one of 5 deals in this $10 million fund. We're going to put $2 million in this deal. You can kind of look at this deal. We'll do a webinar. And if you say, I like this deal, I like the fund concept, I'm in. After that, the deal 2 through 5, you don't really have a say. I just got to tell you, we got another deal. So that's called the blind nature of funds. And that's why I would say some investors don't like funds. They don't have the opportunity to weigh and do due diligence on every deal in there. They're relying much more on the fund sponsor to make those decisions for you. But, I'm just throwing it all out there.
But real quick, Dave, don't we do that with 401ks, right?
Yeah.
I mean,
you're basically relying on the sponsor.
Right?
Yeah. And so my job on the fund is to say, I have experience. I've done 25 apartment deals. I'm in 6,000 units. The sponsors we're working with are the same sponsors I've had a relationship with. It's pretty much the similar geographies. I'm just helping you get this money into the market and in a safer way. So I certainly believe the benefits outweigh any of these negatives. I just trying to weigh the balance. So when I'm talking to someone, they say, well, I don't like the blind nature. I understand that. At the end of the day, look at our track record, and if you like that, then, we're going to stay true to the fund objective. That's another thing, that you have a fund objective. We're not going to go buy and holds and start holding assets for 10 years when the fund says 5 years. And we're not going to go over here and do self-storage deals when the fund says multifamily. Yeah. So we have, we have to stay within a box, right? Yeah.
Absolutely. Yeah. So in all reality, even though it is a blind fund in regards to, when I think blind, for instance, it's self-storage, it's mobile home parks, development, like anything real estate. But if you're more defined as far as it's a multifamily value add fund, that's the concept. And if that's the type of opportunities you're already presenting in front of me and I've already signed off on the first deal, I can trust you to go ahead and find similar assets that meet those metrics, because one, your fees for the fund are a little bit higher. So you're finding better producing assets. So just got to take that into consideration. And that's kind of my idea behind the fund. And I can go on and on about this. And matter of fact, we're going to bring you back just to make sure we have one whole episode dedicated to funds. So we'll do that sometime in the future, man.
Awesome.
I promise you
part of that. Yeah, I'll be part of that.
You know, we're coming to the end, and what's one piece of advice for the PI listeners?
I think we've talked about a little bit about diversification. And so, you know, from an investor standpoint, you know, one of the most critical things I try to teach investors is if you're new to this is, you know, do your own research, you know, read up on this stuff. I'm more than happy to have a conversation with you and educate you on my experiences. And I've dealt with a lot of sponsors and different niches. Once you decide you want to start going down that path, kind of go prudently. You know, if you got $500,000 or $300,000 or 100,000, you don't need to put it all at work and win the first deal. I know it's hard for people to see their money sitting in savings earning nothing. I see that very common with investors. They just can't stand to see it sitting there not doing something, but you don't want to doing something in the wrong thing. So if you had $500,000, my best example would be, I'd like to see you in 10 deals. I'd like to see you in I like the smile states. So maybe you're in Texas, Phoenix, and Florida, low tax states, business friendly, those kind of things. And then maybe you're with some different operators, because we want to have the sponsor operator, some different ones. You never know when you might have a Bernie Madoff situation. You know, I vet sponsors. I've been to their weddings. I know their families, but at the end of the day, you never know. I don't know why people would do bad things, but sometimes they do bad things. I don't expect them to do bad things, but boy, if I had you in 10 deals in Dallas, Texas with one sponsor, and they decided to do bad things, well, we would be so concentrated and so upset with me, the sponsor, yourself. We never want that to happen. So maybe you're in 10 deals, and if that one went bad and sour, you know, if you lost all your money in one deal, okay, maybe the other 8 to 9 are meeting or exceeding expectations, and you come out okay. And I think that's how I approach investing as a financial planner. Thinking about that when I was in college, it was all about diversification. And some people may say, put all your eggs in one basket and then watch that basket. I've heard that. And I'm not saying that you can't fall in love with a little bit more on the real estate side. And once you see the benefits, you're like, wow, I should have been doing this long ago. And maybe moving more of your money from the stock market in some places that aren't productive. And that's fine. But when you do that, you can still find diversification within these asset classes like storage, mobile home parks, apartments. I'm so happy right now with COVID, we never went into office. We never went into retail. We never went into hotels. And I'm not saying those weren't good historically, but I just saw, you know, it's pretty obvious. You read the trends, and then COVID even accentuated it more. The thing with hotels, okay, it's great when business is up, but everybody was saying we're in the 7th, 8th, or 9th inning of this economy. It started up in 2012. It's 2019. People are showing me hotel deals. I'm like, I know, I worked in the corporate world. As soon as the economy goes down, no one travels. I'm talking to people right now today. No one's traveling. Okay. Office. I'm like, well, I don't have a home. I don't have an office. I can work out of my house. I saw that before even COVID hit. And now with Zoom and everything, people's like, some of these companies are saying, you may not even have to come back to work anymore. Shopping malls, retail. We saw e-commerce and Amazon, and industrial's doing well. We were just fortunate to have our investors not in these sectors. And not to say that they haven't done well, not to say they can't do good in the future at some point in some reshaped fashion, but that's why I like investors to kind of do their own research, read up and think, have an opinion and an attitude. And then when I'm talking to them, if we're in sync and it makes all sense, well, we're going to be better partners. And we're better partners in helping you invest your capital wisely.
I appreciate you saying all of that, because of the fact that, for instance, hotels, right? So I was on a webinar just the other day, and they were talking about how COVID has changed their business, because now they don't have to fly out 10 reps from their company for the simple fact to go in, make a presentation to another firm. Yeah. So think about all that and the company savings, and, you know, maybe even do offices make sense for businesses going forward, right? Maybe small offices, but whatever. Right. That's to be a story for another day. But sure. Dave, how can we stay in touch with you?
Well, that's great. So, you know, the site is Thompson Investing, all one word, .com. That's my website. So you can go there. I've got a bunch of free things there. I got a free download of an ebook called Riches and Niches. I think it's great for investors. It's a compilation of a bunch of blogs I did on what is syndication, frequently asked questions I get from investors, to why we like the niches, and some historical data on the returns of these niches, why they've done so well, and how they hold up in 2007 and 2009. I think it's an easy read. It's a fun read. You can download it. there. And then when you download it, you leave your information to get that. And then I'll reach out to you, give you a little introduction. If you want to have a call with me, fantastic. My email is david@thompsoninvesting.com. Love to talk to you.
Thank you for stopping by, David. Really enjoyed the conversation.
Yeah.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet. Happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.